Amazon is slightly lower after an earnings miss, but joining us right now for more is Gene Munster. He is Loup Ventures founder and managing partner. And Gene, let's break this down a little bit. Google, those results were actually kind of amazing. What do you think?
Well, the step up in revenue, Becky, was most impressive, 19 to 22%. Google is the gold standard when it comes to revenue growth. With the exception of last quarter where it dipped down, it's grown, this is just incredible, for the last 4.5 years in 20 to 24% range. It is the tightest of any of the FANG names in terms of growth rates. That is the simple reason, that is the buyback. But the real reason why the stock is moving higher today is I think investors just have more confidence that the combination of YouTube and search and a little bit of cloud, the three of those come together that create this incredible engine. I would also mention there is a little bit of a dark side to this this impressive growth rate, and that's simply that the reason why the company can deliver these predictable results is they have a lot of control over how search monetizes, specifically in how they show ads to consumers, the frequency of ads, for example. And if there's a regulation piece to this, is that if regulators can impact how they show ads, that may have an impact on monetization longer term. But the simple takeaway from Google is a return to its normalcy of predictable growth.
You know, Gene, I'm really glad you brought that up. We spoke with Mark Mahaney earlier today, and he, when you start looking at regulation, said basically there shouldn't be any regulatory overhang in the stock because, best as he can tell, there's nothing that would generally impact it. How worried are you about the idea that the feds could come in and say, here's what you could do with advertising? How much of an overhang do you think there should be?
I think it's a measurable overhang. Again, I think I am most supportive of the Google story longer term, but over the next year, I think it is an overhang. Simply put, is that they are bundling Maps and YouTube with search. You can draw an analogy to how Microsoft bundled Internet Explorer years ago to get distribution, and I think Google effectively does the same. And so that, to me, is one of the areas that they're going to be needling at, I think, the regulators. The second, in terms of what we talked about before, is how they do their search results. So I think there is clearly an intersection point where regulators will hone in. And I think evidence of that is what they've been through in Europe and the amount of regulatory oversight that they've had there, and some changes to how they've had to do business, some fines they've had even recently earlier this year. The company on the call really shrugged off. There was only one question, surprisingly, about this, but they essentially said that they look forward to working with the regulators, and separately they have been in a heavily regulated environment for a long time. I think when you put it all together is that there is, I put Google at probably the second most at risk versus all the large tech in terms of this regulatory environment.
Who's one? Who's number one on the list?
Facebook.
Facebook.
I think just, yeah, same basic concept. How they bundle products, how they bundle effectively Instagram with Facebook. We all know that Instagram would not have been Instagram if it wasn't for the rails that it was that basically elevated it of Facebook. The same, you can argue, can be said about WhatsApp. Payments, for example, would ride on both of those platforms. So I think that there is some, and this is on the competition side. We're not talking about privacy here, but on the competition side. So I'd put Facebook and then separately Google, Amazon, and then kind of a distant fourth would be Apple.